MTN SME Hub. Link to growth. Link to success. Link to the ultimate resource for business advice and insights.
Welcome back to the Big Small Business Show. In studio with us today, we've got Freddy Mahhumane. He is the founder and CEO of KasiD. And the question really today is already about how to scale responsibly, considering culture, people, very people-centric, and reputation. I like the fact that you spoke about reputation and, of course, finance in terms of getting investor ready and making sure that you don't mess up your investor opportunity as well. So, Freddie, let me just start off by talking about strategy, just framing strategy, and talking about two types of strategy. And one of them is not really strategy, but we'll talk about that now. So the one is operational strategy, and the other is growth strategy. Operational strategy, what operational strategy tries to achieve is efficiency. So if it's a salesperson, it's more sales per person. If it's a driver, it's more deliveries per hour, per day. If it's whatever, it's more per this or less breakages, or it's an X divided by Y. You're looking for efficiency in some way. So that's an operational space. So if you look at everything you're doing in the operational space, when you were talking about, I did vibe coding for the CRM system, what you're trying to actually do at its core is create efficiency. You want to be better, more organized, less wastage. It's all about efficiency. And so the requirement, anything that follows that line around, let's call it operational strategy or operations, is targets. So you set targets. You say, I used to do 10 per hour, now I want to do 12 per hour. I used to do 10 million per salesperson, now I want to do 12 million per salesperson, whatever the case may be. Those are all target-based. In terms of growth strategy, because if you think about growth as very much the requirement to build something, you have to build growth on something. You create what are called strategic objectives. The strategic objectives are made up, the essence of a strategic objective is either a physical asset, like another bike, or another building, or another branch, or it is a process asset, which is another piece of software, like the CRM system. To build the CRM system, okay, if it took you to a vision, would it be a strategic objective because it builds something towards something else? So it's either an asset, a physical asset, or a process asset, a template, a piece of software, a website, something like that, that you build. You have to build it. And so when you are in strategic mode, your mindset, that's why I ask you how much time you spend strategic. You actually are not in a strategic mode. You are busy managing the operation side. So you think you're strategic, but you're actually getting more efficient. You're creating more efficiencies, being more efficiency in the business. And then when you're in the business development side, I get that's around growth. But if you, for example, brought in a deal that was to double your size, you would immediately flip over into operations to get to eat that, to consume that, and then you wouldn't be in strategy anymore. You'd be going to go, oh my gosh, I need to make this happen. And then what happens in that growth is that's what what happens is small businesses catch these buses, so to speak, these big deals, and they can't consume it because they don't have the infrastructure, the strategic objectives, the assets or process assets as a substrate on which to hold up that deal. So they implode. Or as they're building it, they're spending all the time building it to make sure they can deliver. They take their eye off the ball. So now they're just building all the stuff now. And then what happens is the competitors come in. Okay, because now your eye is off the market, yeah, and now you're inward focused to make sure you deliver because you don't want to lose your reputation, right? And so you're not out there selling, and in fact you don't want to sell, and your consultants are saying don't sell, just get this right, and they're partially right. But what happens is your competition moves in, and so you're in a dilemma. So the way to think about this is to be constantly building, not wait for the deal. Not you keep building all the time. That's what you do towards your vision, not towards a deal. You're building towards a vision, not towards the deal. Okay, it's subtle but an important difference between the two. So we start off by have you built that vision? And I'm sure somebody like you knows what they have built that vision. Have you written it down? Have you constructed it? Have you built an exco, which is, yes, you have done that. And your exco, for me, I love the fact that you have got an exco win. And I love the fact that and I'm saying this but I don't mean it in the way might come across, is you got really 30 people, the essence of the business, the rest of contractors, and you got an exco already. And I love that. I think that's very, very important. But when I was asking the question about growth, I was asking you about managers. And why was I talking about managers? Because managers, by their definition, are not income producing people. They are costs. Okay. And their managers need desks, and they need offices, and they need a whole bunch of other things. And if your business is growing and the ratio of, keep trying to understand your ratios, you're getting too many managers to grow, you're basically just going to eat all your margin, or your net margin. You'll just eat it away. So there's no benefit to growth because you've got too many managers for growth. Okay. So that your structure, that means that your model is not right. Okay. So you'd have to look at the model, that the model grows not only in the ratio of contractors to internal, so that grows, that moves apart, but that your managers don't replicate at the same ratio as the growth of the business. Otherwise, you're just effectively treading water, and you just got more people. Then you made a comment as well about, like, everyone comes to me and open. That's not going to happen when there's 300 people. So if you're expecting your culture to remain the same now as it is in the future, I'm sorry to be the bearer of bad news. Not only won't it happen, it shouldn't happen. Okay, you've got to get, Freddy, your energy, your DNA, your values have to be embedded constantly through storytelling in the business, through training. It all has to be, well, why is the business here? What's the business doing? Why are we doing things? So that when you are not there, when I have new people join Race Corp, they have never met me, but they know the story of the business. They know why we're doing things. They know how we operate, and their managers do too. And then the last thing is the strategic objectives, to assign that to the excos to build, not you. Your exco must build the strategic objectives, okay, not you. Okay, I vibe code. Every time I hear that, I go, oh my gosh, stop it, Freddy. They must. Otherwise, now I respect going to go and get work. I deep respect, keep doing that. But the building of the business, you have to get the business used to building itself, not you. And until you do that, you will not scale properly. And you'll be a business that's always marginal at the top, because your managers will just eat your margin. Okay. And not on purpose. Okay. And that's all we've got time for. I hope I've given you something to think about. I hope I've given you things to think about. And as always, if you think it, write it down and make it a reality.
The Big Small Business Show, proudly sponsored by MTN Business.